Good morning, everyone, and welcome to the Quantum Leap Morning Leap session. This is our pre-market trade plan set up for Wednesday, December the 2nd. My name is Doug McKay. I'm the founder of Quantum Leap. Each morning we come together and take a look at the market macro to micro, drill down to the trade levels that we're looking at for the day, the targets for the day, and our main hypotheses. If you'd like to get more information, please contact me. I'll put the contact information up in just a second. Before that, please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in here are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. Okay, to get a contact to me, send me an email at quantumleapfutures@gmail.com. There is no website. This is not a commercial venture, so just contact me, call me, Skype me. Check us out on YouTube, follow me on Twitter, all those good stuff. Okay, so let's take a look at what happened yesterday. Forgot to bring this up. Yesterday we were looking for a rotational day. I thought we'd have most of the trading range between the 97.50 and the 78.50, 74.50 area. For the most part, we just chopped around in that area, and then finally we had a late afternoon probe up into the 2100 and checked into the 2100. It was a grindy day. It was a tough day. We grinded out a day out of it, but it wasn't fantastic trading. So let's start with what I always like to do is I like to start with a simple candlestick chart. I do this every morning. I use a 9 EMA and a 20 SMA, and I'm just looking for slope and separation and where we are in the trends, starting with a monthly and working my way down into the intraday. Monthly, very strong trend, was challenged in August and September, took it back in October. Trend is still up. We're getting slope, but we're not getting separation, but we do have the trend intact on the monthly. On the weekly, they challenged it, closed below the 9 and the 20, took it back in October, and so far we're holding the 9 and the 20, and we're getting a start of a new trend on the weekly. On the daily, same thing. Strong trend, challenged it, took it back, starting a new trend. On the 4-hour, consolidation, move up, start of a trend, and you got a little bit of a tech gap right here. Close of the tech gap will bring us down to that 96 area. Remember 96.70, I'm sorry, it's 86.75. Not fully with it this morning is our composite VPOC is what I'm thinking. On the 1 hour, we are being challenged. We did have a Mr. Sneaky right here. They rolled it over. We're below the 9 and the 20 right now. So we're seeing a little bit of weakness coming into the upward trend on the 1 hour. You can see that even better on the 30-minute. You can see it even better. We're getting a slope and separation on the 15-minute. And you can see that we had strength, separation, took it back, failed, and now we're getting continuation. And I'm still running short right now from 2100. Taking a look at the structure of the market, we're broken out right now of this long-term value area that runs from February 5th to August the 19th. We've been watching this 97.50. It's been our key line in the sand above us. We've now broken out of it. We're coming back down and challenging right now. We did rally to 2105 overnight. Our current value area high for the microcomposite that runs from October the 16th through till today is at 2102.50. We broke out of this smaller value area and we're trading above it. The value area for the last 7 days is here at 92.75. 97 was where we last tried to hold up here before we fell off and went down and tested where this whole thing started. Right now, if we hold inside of the 2102.50, I'm looking for a slow grind back down towards the composite VPOC. The composite VPOC shifted. Now, I've been telling you guys that if we saw that shift of the composite VPOC go from the 78.50, which it did 2 days ago, up to the 86.75, then we go in and challenge the 2100s, and that's exactly what we happened. This is a perfect example of long-term. This composite goes back to all the way to 2013. This is a good example of value being accepted higher and then moving away from value and going into price discovery. We failed at 2105 last night. We're back into the 2000s. It'd be interesting to see this morning if we break back above 2100 and go and test that 2105 and that 2110 and a quarter. Let's take a look at what happened overnight so far. We're just putting in a new overnight low, as I mentioned just a few minutes ago, that we're likely to put in a new overnight low. We had our overnight low at 2098, and it held and tested earlier off the news and then came back up, failed off of the VWAP, and now come down, and it's broken a little bit lower, 97.50, but back up into the 28.50. So our overnight low is likely to extend further, but I'm going to put it down here at 97.50. It's right on top of our key line in the sand, which was our key line in the sand above. It's now going to be our key line in the sand below. Our overnight high is up at 2105. Our overnight VPOC is at 2150. Basically right near our range high from yesterday. And there's really not much more information. There's a little LVN right here at 2102. I'm going to use that. I'm actually going to use the 2101.50 to the 2102 for a breakout trade up in to test the overnight high. Excuse me for 1 second. Still dealing with this cold. All right, so there's not real much information that we can get from this other than that, so we can get rid of that. Expand this out. Right now we're in range, but we're outside of value. So this is going to be pretty simple. You can see that the key line in the sand is at 97.50, but we got the value area high at 96 and a quarter. So the key line in the sand has to move because we're likely to expand the overnight low. We got another 30 minutes to go, and we're trading near the low. We're likely to expand this overnight low, so we've got to keep an eye on that. But I'm going to use the value area high, the shorter term value versus the longer term value as my key line in the sand. Below 96, I'm looking for a continuation down. First target is going to be the 94 and a quarter. Second target's going to be this 93, but the main target below is going to be the naked VPOC below us. And then we have the value area low at 88.75. Below that, we're looking for a move back into the composite VPOC at 86.75. That's our main target below range and below value. And then our month open is 85.50. We went down and put a RTH low yesterday at 84 and a quarter. Remember that 84 and a quarter at one time was our composite VPOC. So if they get below, they don't find responsive buyers and they get below the open, they're likely to go down and test this. And then below that, you've got targets down here at 82.50. Our 20-day ATR target is running at 23.73. So off the high overnight of 2105, our daily downside range ATR target is down at 81.25. So we have room to get down here without any range extension beyond the 20-day period. Below that, you've got the 80.25. There's also that 80.50 that I'd be watching, and then the main target below that is going to be down here, at the 78.50. It's the range. Is it range low? Yeah, it's the range low from Monday. But more importantly, it was where the composite VPOC was before it shifted the other day. And then below there, you've got target at 75.50, but the key line in the sand below us is still going to be the 74.50. Below there, looking for a bigger move down towards the 56, 57 with targets at 66.50, 62, 63 area, and then the year open down here at 55, and then your next key line in the sand is going to be all the way down here at this 49.75. That breaks us outside of this value area that we're in, and will likely trigger a bigger move down towards the 21 area. The weekly ATR is running at 73.25. So based off of the high of the week, which is the overnight high at 2105, our weekly downside target is moved from 21 up to 31.75. So we do have room this week to go down to the 31.75. Although they were constricting last week, our 20-day period for the weekly is 73.21. But last week we only had a range of 32.75. So we're tightening up, we're coiling for a bigger move, and we're likely to have a smaller range this week before we break out. To the upside, above the 21.05 range high and the 02 LVN, I'd be looking for a target of 03.50 and then up to take out the overnight high at 05. Target above that is going to be the 06.75 or 06.50. And then 11, there is a naked Globex VPOC at, I think it's 13.50. 13. At 13. And then, of course, the all-time RTH adjusted high at 17. Our daily upside target is going to just shift slightly. Just let me get that for you. We just put a new overnight low in. What was the overnight low? 97.50. So this is going to move to 21.25. Not much, but just it did move, and it could adjust. We still have 30 minutes to go. So my main hypothesis is all going to be based on whether or not we break above the 2101.50 and get back into the 2100s. If we get into the 2100s, I think we're going to go up and test the 2110 area, taking out the overnight high at 05 and 06.50. And chopping up in this area, and just filling in the long-term composite in this little distribution zone here, this little distribution zone up here. If we fail and go up and take out the overnight high, and fail at 06 and come back down, or fail to break out of range, and we get below the value area, then I'm looking for a move down to 91 and a slow grind down towards this 86.75 and testing this lower area, possibly coming down into the 80.50, maybe even the 78. I'm not expecting a huge range today. Oh, excuse me. Although we do have lots of news that can revalue the market. So far, we've got Yellen has already been speaking. We had ADP non-farm payroll beat. Didn't really get much of a reaction. We tested back into the 2100s and then failed from there. We've got revised non-farm productivity came out as expected. Revised labor costs came out slightly ahead. We just getting Torillo speaking right now. I don't know what he's saying, but the big one's going to be the Bank of Canada rate statement. Why is that going to be important? Well, that's going to be important because of the fact that if the U.S. is going to raise rates, it's likely that Canada is going to do it today. So this will actually give an indication on whether or not Yellen is going to raise rates if they raise our rate, at 10 o'clock today. And then we've got crude inventories at 10:30, and then we got Yellen speaking again at 12:25, and then we got Beige Book. So we got lots of news today that can revalue this market. So keep it tight, keep it light, know where you're wrong quickly, because this market could be very, very whippy today. Taking a quick look at gold. Gold has found some more weakness overnight. It's the wrong gold chart. It's come down to this 56.80 level. It's likely to chop around in this area right here. But the key line is still going to be all the way down here at 10.29. I don't think gold's a good trade right now. It's just chopping around in this value area. It's broken out of value, but it's range bound inside of this. We do have a weak low here, and this is likely to come down to the 51.60 again. If it gets below 51.60, look for it to come down to 46.40 and slow grind down toward this 10.29. The key line for me is going to be up here at 10.73.60 again. Above there, I'll be starting to try to get long on gold again. But right now, gold's dead to me until we get above this 10.73, and I'll let it come down. I'll start looking at it again to the long side when we get down into the 1,000 level. But gold continues to see some weakness. I really think we need to roll over in the indices before we're going to see any strength in gold. Anyway, that's what I'm looking at today. Let's take a look at the Keltner just to see how it lines up. Keltner center line is at 2101. 24-hour VWAP, 2101 and a quarter. Above there, a move up to the upper Keltner is going to take us to our target at 2106.75. And then if we hold below it, a move to the lower Keltner is going to take us down into that 94 and that target at 94 and a quarter, most likely continuation of a walk down the line to the 91, possibly the 89, the trip through value from yesterday. Pretty straightforward today, gang. It's we're at that 2100 and testing it. It's all going to be about, can we hold 2100? We can't hold 2100. We start working our way back down towards the long-term price acceptance at 86.75. Can't get more simple than that. Anyway, that's going to be it. As always, trade well, trade safe, and I will catch you on the flip side.